So I have this view that eventually the entire analog world is going to move on chain. And of course, what moves first is money.
Bitcoin and digital assets have been struggling in Q4, surprising many investors who were expecting a huge rally. But is this a sign that Bitcoin is rolling over into a deep bear market, or is it just an ordinary pullback on the way to new all-time highs? Hello and welcome to Milk Road Macro, the podcast that's here to remind you that buying fear is a good deal at any price. I'm your host, John Gillen. Today is Friday, November 21st, and we will be releasing this episode on Tuesday, the 25th. We are joined today by one of the world's most visionary digital asset investors, Dan Tapiero. Dan is a renowned macro-focused investor with over 25 years of experience in global markets, commodities, and entrepreneurship. Dan serves as the founder and CEO of 50T Funds, where he manages significant assets in digital and growth investments. He's also a bit of a personal hero of mine and everyone in digital assets. So in our conversation today, Dan is going to save Bitcoin. If that sounds good to you, make sure you like and subscribe. Share this episode with somebody who's going to enjoy it. And as a reminder, before we get into it, markets are obviously rough right now, but this is the best time to zoom out and get your bearings and get educated, plugged into a good community. Pro All Access for Milk Road is 40% off for the next week. That includes everything we're building at Macro Pro, Crypto Pro, and our new AI Pro tier, which is launching in January. If you want to stay plugged into macro and all the above, the new AI wave that's coming, this is the move for you. The link is below in the show notes. Take advantage of that sale. And without further ado, welcome to Milk Road Macro. Dan Tapiero, how are you?
How you doing? I'm doing well. I don't know if buying fear at any price is the right comment. You said that in the beginning. I think, yes, buying fear is a good idea. But look, these are the most difficult markets that I think have existed. As you mentioned, I spent over 30 years in the traditional world, working at various hedge funds and having my own fund as well. Commodities, currencies, bonds, emerging markets, stocks. I've traded pretty much, all of those markets. There's nothing more difficult than the cryptocurrency markets. Bitcoin, ETH, Solana, I think sort of the core assets. And then you start moving down the food chain, and those things are extremely difficult to trade. I think that there are people who successfully do it. But I would say for the civilian population, it's not a good idea. As you mentioned, I manage what is, I think, the only growth equity fund in the world exclusively focused on crypto, blockchain, digital assets, Web3. But, we only invest in the equity of the larger businesses. We don't even do venture. Most of the funds, Andreessen and Polychain and Paradigm, the well-known guys, they focus on venture and their early stage and seed. Those are teams that, they have cryptographers, blockchain developers on staff, the teams of, 50 people, 100 people trying to extract money at the early stage. And they also, are involved in liquid trading. And there are very few number of those compared to the number of investors and traders in the old world. So my advice really is that the only way to build wealth in this space is to think about it over the long term. I think you have to have a 10-year horizon, and you have to know that during those 10 years, you're going to have 2 or 3 bear phases, and there's just no way around it. And Bitcoin and ETH are going to go down 70 to 85%, and the cycle has not been repealed. However, I don't think we're in a bear market today. I think this is a bear correction in a bull phase still, and I've been saying since the bottom. I'm just going to keep rambling on because I'm going to keep going. Since the bottom in 22 and 23, I've thought that, we would head up to about 100,000 on Bitcoin and then stop. And I said that, probably 2 weeks after the FTX collapse. I've said it at the end of 22, 23. 100,000 is just a big round number. It's a number that every person who has bought, let's say, sub 5,000, and there are a lot of people, I think in their mind use that as sort of the holy grail number, right? If I make 100x, if I make 50x, if I make 20x, I'm going to get out, right? And so 100,000 is here, and I hate to say it for the sort of the short-term traders or the younger guys in the space, but from our perspective as long-term investors in the space, there is no difference to me between 80, 100, and 120, right? To me, for us, the way we invest, that's all the same price. And I know that's not, you move from 120 to 80 in 2 months. It's a 40% correction. It's an extremely fast correction. People are unhappy. There's blood everywhere. Stories about, did a market maker go under? We had the October 10th flash crash, the Binance flash crash, where literally things evaporated. What happened there? By the way, that happens in the ordinary markets as well. People complaining about crypto. Crypto's more severe. As I said, it's more difficult, but we've had plenty of flash crashes. I can remember the 90s and 2000s in markets. One of the most famous ones in currencies was the flash crash in Euro Swiss. A buddy of mine was long Euro, short Swiss franc, which is something that didn't move much, went to the bathroom, came back and was completely wiped out. And you can go back and look at I forgot what year that was, but flash crashes happen. It's just, markets are a reflection of human behavior, human condition. Markets all trade sort of the same, whether it's Bitcoin or ETH, or whether it's, corn or soy, or gold. They have patterns. There's certain knowable ways that markets trade, but you need to have a lot of experience and you have to have suffered a lot to be comfortable with the volatility. Now, why I say this space is not for civilians is just because everything is magnified 10x in crypto. The markets are 24/7, 365. The S&P future trades 5 times less, I think, the amount of hours per day, right? So that market for the S&P future or U.S. stocks, I think U.S. stocks trade, crypto trades 5 times longer per year. So every year in every year in the traditional world is like 5 in crypto. So after 5 years, you've been bludgeoned to death multiple times. You've had these massive collapses. You have whole areas that explode. You have meme coins going up and then vaporizing. You've got NFTs, which were huge in 21, not existing. Then you have stable coins, which didn't exist in 21 at all, basically now doing $25 trillion in volume. Saying there were no real world assets to be tokenized in 2019, 20. Now that's a big theme. I go on and on and on. The innovation, the speed, the ability to make a fortune, and then also lose it at this speed does not exist in the old world. And so, we have this current correction, not to ramble too much, but we have this current correction. And look, I feel for people who have been hurt. But, I think this is all still within reason. The bull bear index, the greed fear index on coinmarketcap.com is at well below a 2-year low. It shows 11% in terms of fear. So it would be 11%. I would call it bulls. That's not a lot. Can the market go down more? Sure. I don't think you can go to 0 bulls, but you can maybe drop more. I would say, and I know this doesn't help people, but I think if we drop down sort of below 50,000, I think there'd be a real problem. And I don't expect that at all. I know people like, well, Dan, that's pointless to me. I'm a trader. Who cares? That's too far away. I still think we're going to hit 180,000 in Bitcoin in this cycle. And should I continue on? Just continue my monologue?
This is the easiest interview I've ever done because I didn't even ask a question and you answered all 5 questions I had about Bitcoin.
Well, thank you.
You said where your floor was, where your top was. And you think you talked about the relative strength indicator and the sentiment in the market. So yeah, if there's any other thoughts you want to have on Bitcoin, I think the one question I would add is, are you accumulating here or are you just sitting and watching right now?
So 180 is sort of the conservative target that I laid out, again, in late 22, early 23. And, I think I use that number because it's roughly, there are many reasons. So, but let's not get into all of that right now. I would say that if we zoom out a little bit and talk about the macro backdrop outside of crypto digital assets, I do think the Fed has been dragging its heels. I think Powell has been, frankly, a horrible central bank chairman. I think, I remember, the brilliance of Alan Greenspan. Bernanke in the beginning was terrible. Then after 2008 was very good. Janet Yellen was kind of down the fairway. But this guy he raised rates from 0 to 5 too much too quickly, blew all sorts of things up. And then the economy's been slowing for a while. And, AI has made things a little worse. I mean, it's made things, I think, big picture better, but the unemployment rate is definitely going to go up. Doesn't take a genius to see that. I think, unfortunately, we don't have Scott Besson at the Fed. Scott is sort of an old-time macro guy who I know from my old world, and the guy is sort of one of the top macro thinkers and people who understand liquidity movement. I think he'd probably be the best guy out there to manage liquidity policy. But I'm sure he and the Trump administration have someone who they think will be competent. And I think I say aligned, but I mean, monetary policy just has been off, in my opinion. There's not been any real concern that we should have on inflation. The blip up that we had in 22-23 was just obviously as a result of the post-COVID fiscal stimulus. I mean, it's very straightforward. It was not a structural change. And, 2-3% CPI, it's irrelevant. 6%, okay, but we knew that was a blip. So whether it's 3 or 2, it's like, minutia that's irrelevant. And I think Powell, having come from the private equity world, not really as skilled as previous Fed chairmen in the past 40 years on markets. I don't really see him as a market practitioner, has kept rates too high. I think rates should be closer to 2. The dollar will eventually be weaker. And then I think we're going to have a run in the markets, and I mean all markets, into the November 26 elections. So I think that the purging of the excess in NASDAQ, which hasn't quite happened yet, but I think potentially will now. Bitcoin tends to lead things. Despite Bitcoin leading, gold has been actually quite strong and holding in. A lot of structural tailwinds there. We can get into that in a second, but I really do think that the administration is happy to have weakness now. Let the Fed keep rates too high now, and then in potentially Q1, or as the markets begin to sniff, I'm not sure when Powell's final date is, but that he'll be moving on, and that we can have a nice ramp into the elections. I think that'll carry everything higher. I mean, that's sort of my macro backdrop. And then the crypto, if you look at where we were in 21, Bitcoin was 65,000. Today it's 83, 85. So the fundamentals today versus 21 are like 10 times better. Now, I know we have the DATs, and the DATs now have sucked in a lot of liquidity. I've not really been interested in investing in any of the DATs. We did offer one as a co-investment to our investors because we believe that it actually will be an operating business. We only invest in operating businesses. And I think Michael Saylor is a genius, and I think strategy is just fine. But all of these other ones, I don't think there are enough professional people managing all these other DATs. So they've sucked in a ton of liquidity. And as usual in the crypto space, you've had a lot of good money throw itself after bad things, and that money needs to be expunged. And that's what that's what's so fascinating about, cryptocurrency, blockchain, however you want to call it, as a market, is that it's such an empty playing field. It's so complicated. Understanding the tech of certain chains and use cases, really being deep in the weeds in DeFi. I mean, there probably aren't 10,000 people on the planet who really deeply understand what's going on in decentralized finance. However, in 21, that world didn't exist, I would say, or barely existed. And today, you've got $200 million of revenue per month being thrown off in the world of DeFi. So there are so many more fundamentally super bullish things today versus 21 that are not discounted. I mean, the most important being this administration. I mean, we all remember how much under attack we were in 21, 22, 23. Gensler is probably the worst SEC chairman of my lifetime, completely, suing companies that we have in our portfolio that are actually today public. Like, think about that for a second. 18 months ago, they were being sued, and now they're public companies. So clearly, that whole administration had the wrong take on crypto and blockchain. And frankly, I will say something maybe a little bit out there, but I do believe that our world helped turn the election in Trump's favor. There are 50 million Americans who own cryptocurrency, and the PACs that were involved from the crypto community contributed, I think, quite a lot of capital to that campaign. And I think the Democrats now realize it, with the bipartisan passing of the Genius Act, I think eventual passing now of the Clarity Act. I don't think the Democrats are going to attack the space again. People ask me, is this administration thing just a one-off and it will revert back? I don't think it's reverting back. I think that it's a big enough voting cohort in America. And I think the U.S. now realizes that it should be the leader in what I call, this is the digitization of money and value, which is essentially what Bitcoin and blockchain is. It's just like the internet in the 90s was the digitization of information and ideas. We're going through the digitization of money and value, and the U.S. must take the lead. And I think that's, like, if I look at like the 10 most important things going on today, they basically didn't exist in 21. So I think Bitcoin's probably worth a lot more than 30% higher than today. And then last thing I'll say before I let you cut in is that the digital asset ecosystem, which is how we measure things, was worth about, that's Bitcoin, ETH, all the alts, and then the value of all the equity in the space was worth about 3 trillion, 3 trillion in 21 at the peak. And today is now at around 4.5 or something like that. So I'm still expecting, another big chunk of this bull.
ETFs provide investors with a structured, disciplined, and diversified approach to crypto, which is cool, but the world is moving on-chain. We need a crypto-native equivalent. That's exactly what Reserve's decentralized token folios, DTFs, bring to the table. Reserve DTFs are rule-based baskets of crypto assets packaged into a single token, like CoinMarket's CMC20, crypto's version of the S&P 500. Go to milkroad.com/reserve to find out what's on offer.
There's a lot of room to go higher. Dan, this is maybe the easiest interview I've ever done because you're just spouting great wisdom and insights on the market, things people want to know. And I do agree with you. I think something that's kind of going to fool a lot of people is a lot of people expect a midterm election year to be sort of down for the markets, but the new Fed chairman in May and the impact of the big, beautiful bill, many other things, I think we are going to see a bullish 2026, which will surprise some people. I do want to ask you about 50T and specifically how you're thinking about the digital asset space, because you're invested in a lot of different companies. One of the ways I've seen you break down how you think about the market is you bucket these companies and the way you think about the space into consumer, infrastructure, and finance. Just walk us through a little bit about how you think about the digital asset space, why those three buckets, and what's your view of the whole market like that?
Yeah, look, the digital asset ecosystem, which is a term that we started to use, when I had the idea for these funds in 2019, 2020, sort of a catch-all for this broader digitization of everything and the application of the decentralized ledger to all aspects of business and life. And I did this interview, first time I ever really talked publicly, in the middle of 2019 with Raoul Powell. And I called the Bitcoin blockchain, but, the invention of Bitcoin, as a truth machine, as a machine through which all things could be verified and legitimized. And I posited that, human beings tend to exaggerate. I don't want to say that all human beings lie in some form or another, but everyone certainly has told white lies and certainly exaggerated and exaggerates. But there are certain areas where that is not a good thing. Maybe, your wife asks you, I've been married 26 years. Your wife asks you, does she look pretty tonight? And you're going to say yes, no matter what. Right. So that's a place where you definitely have to say, you have to sort of say yes. But as an example, just take something as simple and basic as, your passport, right? Why is it that we're walking around with these pieces of paper, and they're getting stamped manually? So I have this view that eventually the entire analog world is going to move on chain. And of course, what moves first is money, because the money guys, they're the fastest, they're the quickest, they care the most. They're going to work 24/7. We had this big boom in Web3, blockchain gaming in 21, hasn't come back quite. But we all thought there are 2 billion gamers out there. Oh, it's obvious they're digital natives. They're going to want to trade their skins. They're going to want to have all of their various in-game items on blockchains, and then of course fungible with other items, and be able to trade them on OpenSea, right? Well, that didn't quite happen, because at the end of the day, it will happen, but it didn't quite happen because the reality is people who play games, their first priority is to have fun in the game, okay? And so they want to have fun in the game. The second priority is maybe like trading, and extracting value from their in-game items. That is not the case with money people, Wall Street people, guys from my old world in the hedge fund business. They care about one thing: return on their capital for their LPs. And so that's why you've seen, for instance, stable coins take off. And we've been super bullish on stable coins, since 2020, 21. We were fortunate to be able to invest in Circle at a $3 billion valuation. That's been one of our big hits in our third fund. I know the price has come in a little bit, but that company is going to do $3 billion in gross revenue, somewhere north of 500 million, between 500 million and $1 billion in net profit. Circle is one of the core companies of the space. It's not going anywhere. You could buy it here and hold it for 5 to 10 years, and you're going to make money. I come from this world where I do believe it's extremely difficult to make money and extremely difficult to hold on to it. And so when I say something, or when I see something that I can say with a high degree of certainty, like if you buy Circle today, whatever the price is, I have a very high degree of certainty you're going to make money in 5 to 10 years if you hold it for that period. You can't really say that about that many things. And then I also say, look, crypto is the easiest market to make money in. It's just the most impossible market to keep it. And so, you can get lucky. Anybody can get lucky. But over time, it just doesn't exist. And you have to have a process, do a huge amount of diligence. I've got a team of 21 people. We have 2 billion under management, 2 billion AUM today. I invested in 24 companies. We have 12 board seats. We get involved with our companies, and we own, the growth names, companies making at least $50 million or more. I invested $600 million just in 4 companies, in Ledger, Animoca, Kraken, and Deribit. And, Deribit got bought by Coinbase, which was the largest deal in the history of the crypto markets. And the funds have had 6 realizations this year. So in terms of private equity generally, because I don't compare us with venture, we don't take venture risk. We don't do seed or pre-seed. We just, venture is make 10 investments, 9 go to zero, and then hopefully one of them is Google or Amazon. That's not our business. And we're not trying to make those home runs. We're trying to make a 5 to 8x return over the 10-year life of the fund. And, we're buying companies now in the private markets at basically between, 4 and 8 times revenue. And they're trading some of them at 15 to 25 times revenue in the public markets. I think the public markets are clamoring for crypto blockchain equity. I know things have come in a little bit recently, but until recently, there was only Coinbase really as a large public crypto blockchain company. Now we have a few more, some of the ones in our portfolio, Circle, Figure, eToro.
I was going to ask about this, just so our audience knows. Explain what a realization is, and then talk about this IPO process, because you've been involved in so many of them: Circle, eToro, Gemini, Figure. I know Kraken is coming soon. And so, from your perspective too, though, right? After the IPO, after the realization, do you go back out looking for new investments? What is the next step for 50T after these realizations happen?
Yeah, well, we're launching a new fund. No, we return the stock back to the LPs. So, our value add is us buying stock in the primary or in secondary markets, in the private markets. We don't really have much competition today. Many of the traditional tech growth equity investors, the very well-known, very successful, larger names, Thoma Bravo, Silver Lake, and even some of the large sovereigns like CPP and Temasek, they came into our space in 21. And unfortunately for some of them, they were hurt in FTX and Celsius and BlockFi. They invested in companies at 50 to 100 times revenue, and they really haven't come back into the space. But we didn't invest in those. We passed on over 200 deals. Our portfolio has pretty much remained nicely intact through the bear phase. Our max drawdown in any fund from the absolute peak in 21 was about 10 to 15%. So we didn't really get hurt in the bear phase. And now we're seeing these realizations, which is just simply companies we bought in the private market going public or getting purchased. And, once we have those realizations, we deliver the stock to our LPs, or, sometimes they prefer to own cash. We give the stock, they can sell it for cash. If they want me to manage it, in a public vehicle, we can do that as well. But the reality is we're launching our 5th fund now, which will close in March, but we're having a first close actually in a week. And that's going to be well north of $100 million on our first close. And then I think our final close will be somewhere between 500 million and $1 billion. Could be more, actually, given how much capital we're returning. Before March, I think we're going to be returning north of 500 million. And therefore, our DPI, which is basically how much capital what percent of your committed capital got returned, we're going to be returning over 50% of all of our investors' committed capital. That's my estimate in our funds 1, 2, 3, and 4. And that is even fund 4, which closed in November 24. That fund's up 300% today, even though it just closed in November 24 because we were able to buy a lot of stock during the bear phase. But now we're going to be returning likely over 50% of that committed capital, which is really unheard of in the PE world. These are 10-year life funds. And the first 2 funds were 21 vintages. Fund 3 was a 22 vintage. That'll put us probably in the top 1 or 2% of all PE funds across all sectors and mandates globally. So we picked the right spot. We've got some great companies, and we still have 17 portfolio companies left in the first 4 funds. So, pretty exciting times. You asked about the digital asset ecosystem. For us, the way we look at it is that there are sectors that we look to invest in. We want to have a broad, diversified portfolio. We chose those 3 buckets that you mentioned because we think those 3 buckets give you a nice exposure that's leveraged to many of the developments within the DAE. And today, within the DAE, you've got 10 sectors, but then there are also 100 subsectors. And we think in our universe of companies valued at around $400 million or more, there are 125 companies. And so we tend to invest, as I said, 40 to 50 million in revenue as a minimum. We don't like to pay more than 10 times revenue. And so that's basically our universe of companies.
Okay, I know you made me promise to get you out of here on time, so I want to kind of squeeze a few questions into one.
That's why I was talking so quickly, because we're short on time.
Well, I know. Well, you got a lot in.
Answer all your questions before you asked them.
You did an amazing job. So I want to kind of put together a couple of things here. I want to basically just ask, what are your most focused on in terms of the meta narrative in the digital asset ecosystem? There's a few things I've heard get some attention and you speak about before. One of them is tokenization, real world assets. Another one is the privacy narrative, which I know that Zenrock is doing some things with. And then I know that you're also been talking a lot about digital identity and how the rise of AI and AI agents makes that a really important solution. So, without having time to go into all of these narratives, I'd like to know, what is your energy going into the most? What do you see as the next narrative or the next emerging trend in digital assets?
Well, I don't know where you got those 3 things that I'm focusing on from. You must have read our documents or looked at another interview or something, because I do some
research, yeah.
Because you nailed it. Or did you just put it into ChatGPT and say, what is Dan looking at now? But no, you really nailed it. Those are the 3 sort of core areas. The privacy area is really just gone crazy recently. And yes, one of our companies that we operate majority own in funds 3 and 4, Zenrock, in partnership with Solana, has launched Zen ZEC. So Solana partnered with us, gave us $3 million, which was, a huge coup for, this is the only venture thing that we do. I won't touch it, venture otherwise, but we operate it and own it. So it's a bit different, and started the company essentially from zero. And we launched about a month or two ago, the first decentralized wrapped yield-bearing Bitcoin on the Solana chain. And I know for non-crypto people, that sounds like, oh my goodness, what is that? We then followed that up with ZenBTC. We then followed that up with ZenZec. And we've got a decentralized Zcash trading on Solana. The volumes have exploded. And so that, remarkably, we've already done cumulatively, I think, close to $80 or $90 million of volume. And this is a company that basically I bought out of administration. The tech was great. We loved it. They had a decentralized multi-party computation tech. The company was mismanaged, misled. And, we were able to turn it around and actually turn it into something that I think is very valuable. And that is that in the world of DeFi, it just never made any sense to me that wrapped Bitcoin would be held at a central counterparty like BitGo. And I love BitGo. They're great guys. We got no problem with BitGo, but it just didn't make any sense to me. You've got all these guys moving cross-chain, swapping, doing all kinds of stuff, and yet they were okay with having their Bitcoin custodied at a central counterparty. So we decentralized custody, and I think, and added a few bells and whistles, and that's what, Zenrock is doing with ZenZec and ZenBTC. But, it's this ability for the ledger to be this truth machine, this stamp. And I always go back and I think back to like 19th century France, when the whole country was essentially run by the notaries. To be a notaire in France, was of high importance, and everything had to be, approved and signed and this and that. Now, today we don't have that. But when I think about all the sort of documents that live in the analog world, like your trust documents, your taxes, your legal, your this, it's a mess. It's all in paper. And I think one day, everything of importance, we're just going to have on our phone. We're going to have a digital wallet. Everything is going to be in there, and I think there's room for privacy there too, because once you have everything in there, is it really fair that people should be able to track your transactions, right? Like I come from the world, I worked at Tiger, worked with Stan Druck at Duquesne. And, in the old hedge fund world, when you have like an important investor or trader who comes into the markets, the way it used to work is, the word would get out. That's how the word would get out that, Druck was buying euro, and then all of a sudden the euro would spike and you wouldn't be able to get your position on, right? So you'd have to buy it quietly because you wanted to get your position on. So it's kind of like unfair a little bit. Like, I think we're moving to that place, and I'm thrilled about that. But I also think you should be able to purchase things without the entire world knowing exactly who it is. And, on-chain analytics, which is an area I'm very bullish on. I think data, I'm very bullish on. There still are companies that are growing. We think, the Blockworks guys are doing fascinating stuff with data. That's a company we own about a little more than 10% of. That's one of the few sort of smaller companies we own. But, you mentioned RWAs and tokenization. That's all happening. I mean, even Larry Fink is leading the charge on that one. So yeah. I think that's in the first inning. And AI is very important. And I said something. I was at the Cantor Fitzgerald conference in Miami. What was it, last week? I can't even remember. And I did an interview there, and they published it a few days ago. And I really do believe that, in the future, and I look out for this Fund 5 that we're doing too. Look, we're in this world where AI agents are going to be acting independently, transacting independently, sending value back and forth independently without a central counterparty. And it's impossible that they're going to be calling up Citibank or JP Morgan and doing a wire or whatever, an ACH or what, all of that's going to go away. They are going to be using programmable money, smart contracts embedded into blockchains. That's essentially what Ethereum is. And I think, you know, some of these chains have really been battle tested for speed. You know, so when people say, oh, you know, Solana, it has this problem and has that problem, the memes were stupid, maybe. But what the meme coins showed you is that you could put a huge amount of traffic through on those blockchains. And so I think the memes were important because they're like, they showed that the rails work under extreme usage, right? And that's, you know, that's important.
Yeah.
And in a world where you've got millions of AI agents sending value back and forth, the blockchains
have the infrastructure to handle that, right?
Yeah, and so I think there are going to be businesses growing up, and this is how phenomenal, you know, this space is, how early it is still. I still can't believe how early it is, but how early this whole space is, that there is not a single company in the world that's yet at the growth stage in this place of overlap between AI and blockchain. We have one company we're looking at that's still venture-ish. Again, the venture capital guys, I'm sure Andreessen and company, they've already made quite a few investments in that, you know, world where AI and blockchain overlap, but none of them are at scale yet. None of them are doing enough revenue for us yet. There is one that we like, but I suspect within the next 3-4 years, and this is the sweet spot for our Fund 5, I suspect, you know, there'll be, you know, we put 10 to potentially even 20% of our portfolio into companies that are the winners from, you know, these early stage developments in the AI blockchain overlap space. So,
yeah. Well, look,
I gave you a lot of content. You happy with the content?
Yeah. I'm very, very happy. It's a great interview. We're over time, so I'll wrap it up here. But just to like pull some of this together for the audience, you know, I want people to hear what Dan is saying. He's not getting bogged down in short-term sentiment. He's taking a long view. He is knowing that this asset class has room to grow and looking for opportunities for the future, not getting panicked about the moment. I think that's a big lesson here. And then, you know, just like a lot of the thought processes there on like how Powell getting replaced is bullish, how there's a lot more opportunity in 2026. So I really appreciate you coming on to sort of like just share your perspective on the market and the outlook for the road ahead. So to close with, I just want you to give a chance to share, where can we send our audience to find more of you and your work online?
Well, I'm on X, but I've been doing a little less on X, DTAP, and then on LinkedIn, I think I'm under DTAP 2, or just pull up my name. I like to put things out on LinkedIn. I found everything regarding my investments in 50T. Whenever I mention it on X, no one cares. They only want to know like my market view, you know, what am I thinking about Bitcoin or gold or the markets or NASDAQ? And so I sort of have a bifurcated audience, and I keep the 50T stuff on LinkedIn and the market, you know, stuff on X.
Well, Dan Tapiero, this was a really fun conversation. Thanks for being on Milk Road Macro.
And thank you for having me and letting me sort of just riff there because we were pressed for time today.
I really appreciate it. It was the greatest interview I've ever listened to.
Oh, come on. You can't say that.
Dan, you're the best. Thank you all for joining us. I hope you all learned a lot. So until next time, stay safe, stay educated, stay bullish, and we will see you all on the next episode of Milk Road Macro. Thanks for being here, everyone. Bye. Want insights on what's really moving markets and how we're trading each event? Subscribe to our channel, then join the Milk Road Macro and Macro Pro newsletters. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.